Good morning, everyone. Welcome to the Foreign Correspondents Club of Japan and to the latest in what we call our deep dive events, in which we ask panels of experts to educate us or inform us on topics of current interest. I'm Anthony Rowley, former president of the club and head of the deep dive committee. Today's event we've called Japan's Economy and Markets under Takaichi. We've since inserted a big question mark after Takaichi because obviously there is some uncertainty as to whether she will indeed be the next Prime Minister. We have three experts to discuss these issues, and I'll introduce them in the order in which they will be speaking. To my right is Naomi Fink, who is Chief Global Strategist and at Amova Asset Management, which of course formerly was Nikko Asset Management. To my left is Jesper Koll, who is a well-known face here, Global Ambassador and Expert Director at the Monex Group and an Investment Committee member of the Japan Catalyst Fund. And joining us from New York City is an alien, apparently. Joining us from New York City is Richard Katz, who is most recently best known as being the author of the book, The Contest for Japan's Economic Future, Entrepreneurs versus Corporate Giants. Okay, well, I will just say very briefly at the start that, obviously politics in Japan are currently in a state of considerable turmoil, with uncertainty over who the next Prime Minister will be and over the shape of the new administration and its policies. This turmoil, I think, could persist for some time until a new equilibrium is found. The political aspects are going to be discussed at an event due to take place here in this very room this afternoon from 3 o'clock onwards. But this morning we want to focus on the short to medium term prospects for Japan's economy, finances and markets in this uncertain and volatile environment. So with that, I'm going to hand over to our experts. I just remind you that if you have a mobile phone, Kate Idenwa, please put it on nano mode or switch it off as a courtesy to our speakers. So first, Naomi-san, if you would...
I am just going to share some of my materials here, and hopefully this will work okay. So to begin on this theme, markets got very excited indeed when we saw the prospect of Takaichi Sanae as Prime Minister. And they seem to interpret the potential for Takaichi to become Prime Minister as a sort of Abenomics Part 2. We saw a huge, or a lot of support for stocks, and then we also saw a weakening of the yen from already weak levels. But I would like to go into reasons why this might not be the best strategy for Japan right now, even if Abenomics was the right strategy at the time. That is to say, starting in December 2012, conditions are very different now, and I'm going to go into why. First of all, we take a look, this is just setting the scene, we take a look at the representation in the lower and the upper house, and we see that the LDP, when it did have the alliance with the Komeito, was just short of the support it needed for a majority, whereas of course now, obviously, after the coalition has dissolved, it's a bit less secure in being able to negotiate its way to gaining that majority. I'm not going to go into the politics. I am going to go into the economic side of things. So as I mentioned, Abenomics was probably a very appropriate policy at the time. However, things are extremely different now. And one big way in which it's different, and this matters to the electorate as well, is that inflation has been in positive territory for the last 3 years. It's in fact been above Bank of Japan target for the last 3 years. At first, we're looking at a chart of PPI versus core CPI, and at first it did look like it was very much cost, input, import driven. And then so I think the initial response was to wait for those transitory effects to dissipate. And that wasn't just Japan, that was the US, that was many other economies. But then we found out that inflation was a bit stickier than we thought it was. And that was, again, not only Japan, it was elsewhere. So what began as a series of supply shocks became something more. And in the US, for example, the Fed's use of the word transitory became a very expensive word. It's been very highly criticized. And now there is a debate going on as to when growth indicators soften, how appropriate is it to be forward-looking on the growth side without taking inflation adequately into account? So as I show on this chart, the arrow here, start of Abenomics, very, very different situation. We were much clearly in deflationary territory. We, of course, didn't have the same type of supply shock, nor did it spill over into core prices. We are in a different situation from that respect. And I know that Takaichi has made a nod saying that, oh, it's just that we haven't seen demand pull inflation. Well, that's a very nice kind of cute thing to say. However, the Bank of Japan has enough difficulty quantifying some of these measures of underlying inflation. It admits that they're somewhat inexact, and demand pull inflation is even vaguer than what the Bank of Japan is trying to quantify. It talks about a virtuous circle of wages and prices. So that means wages rise and households are able to tolerate price rises. We are seeing the signals of that. We are, of course, not seeing the signals of households go and splash out and increase their discretionary spending. However, we have undoubtedly seen a very different situation than we saw in 2012. And it's not just on the inflation side. If we look at nominal growth and corporate profits, we've seen quite a healthy recovery in corporate profits thanks to the recovery in nominal growth, because revenues are denominated in nominal terms. And we've seen some quarters of double-digit corporate profit growth. So that is very different, again, from the arrow here around the start of Abenomics. We did not see those continued quarters of double-digit growth. And those continued quarters of double-digit growth have been the basis for being able to weather things like the US tariffs. So very different situation. On unemployment, we saw unemployment on the 4% handle in December 2012. We now see unemployment between 2 and 3%, and that makes a big difference. So here, the large chart shows unemployment superimposed upon the dotted line, which is the ability or difficulty finding labor. That's the sub-index in the Tankan, and both have been declining. And now we see the ease of finding labor or difficulty, since we're going into negative, further and further into negative territory. That's kind of going down on its own beyond unemployment. And why is unemployment important? Well, I have this very little graph on the left-hand side, and that's the Phillips curve, and it shows that we are clearly above the inflection point. This is the relationship between unemployment and inflation. So we are in inflationary territory. So then the employment situation also very different, also much more reflationary than it was at the start of Abenomics. On the accommodation side, is policy accommodative or not? Well, I believe it's very accommodative. And I don't just believe that. On the left-hand side, I quantify it. And I quantify it by looking at a measure of real interest rates minus real growth. It is clearly in negative territory, even despite the Bank of Japan hiking several times, very slowly, of course, but we are no longer in negative interest rates, yet we are in net accommodation territory, very much so. So the Bank of Japan can hike once or twice again, and we would still, all else equal, be in accommodative territory. So that is very, very different, again, from what we saw during Abenomics. Even though we had low nominal rates, we had a much less accommodative environment by this measure. On the right-hand side, we take a look at another measure here, the dollar yen. So here we see a vast contrast. Dollar yen was below 100, significantly below 100 at the start of Abenomics. Now it's above 150 again. It is weak by almost any measure. By long-term measures, I know people don't necessarily look at these long-term measures as a good predictor. They're not, but it is a good indicator of how cheap Japan is right now. Dollar yen by purchasing power parity is around 100. So of course, yes, the criticism, it's not a very good predictor. Next week, next month, next year, sure, that's true. But then let's look at a shorter term kind of uncovered interest rate parity type model, and that's on the upper panel here. And here we were beginning to inch toward that zone where uncovered interest rate parity measures were perhaps not so cheaply valuing the yen, not necessarily fair valuing. But now we've gone back into cheap yen territory, even by this shorter term measure. So that is very, very different from what we saw at the start of Abenomics. And then what Japan has actually done during that period of very accommodative policy is also important. Around the start of Abenomics, the three arrows of Abenomics, arrow number 2 was fiscal policy. Now the fiscal policy side had a dilemma, and that dilemma hasn't gone away, but it's actually gotten comparatively better than it was back then. At the start of Abenomics, on the left-hand side, I show the arrow here, and we're looking at the Japan's primary balance, which is its kind of midterm primary fiscal prudence goal. And we were significantly far away from it. Now, take a look at where we are now. We are a stone's throw from this goal, from primary balance. And depending on fiscal policy, it's possible we may not reach it next year, but it makes a big difference whether the new government actually abandons this goal or just pushes it down the road a little bit, because we are so close right now. And why does it make a difference? On the right-hand side, I show why it makes a difference. Now, this is an IMF measure of debt as a percentage of tax revenues. It's a measure of fiscal prudence, and I contrast Japan versus the US. Now, keep in mind, the US was growing a lot more quickly than Japan was. And what did it do during the time after the pandemic, where everybody had to make fixed fiscal expenditures? Well, for a couple of years, the US inflated away some debt. And this we see by the blue bar here. And it inflated debt away at a faster pace than Japan. But it stopped after those couple of years. Even though it was growing faster than Japan, it stopped and it went in the other direction. Japan continued. This is what inflating away debt looks like. So even though we're not going to get to a good debt to GDP ratio overnight, we are well along the way. And that primary balance indicator shows this, and this fiscal prudence indicator shows this. And this is what probably Japan really needs to preserve right now, even if it does engage in interim fiscal measures, if we don't really want to undermine confidence in the prospect for fiscal prudence in Japan. Now, talking about the market specifically, because I know that's what we're here for, equity valuations have adjusted upward. If we look at relative valuations, and I'm looking at price earnings on the upper left-hand side here, we see that equity valuations in the US, and by virtue of this, the world, so the US and the MSCI ACWI, they are far above their 20-year range, not to mention how far above the box plot of the interquartile range over the last 20 years they are. Not so for Japan. Japan is right in the middle of that range. And this is even despite the Nikkei's rally to record levels. So I'm not saying that it's not going to move. Healthy markets have two-way trading. But what I am saying is that it's not as egregiously valued as maybe some of the other indices here. And we see that other non-US indices are a lot more fairly valued as well. If we take a look at another aspect of the equity market, the equity risk premium. Equity risk premium in Japan. Japan now compensates its investors at a competitive rate to the US. The equity risk premium last year moved to parity with the US. Why? I will list some of the reasons why, because these are inputs into the equity risk premium. So dividends, share buybacks. Companies are deploying large balance sheet cash to buy back shares and pay dividends. So we have the reflation and we have the corporate governance to thank for this. We've got solid earnings, and then that's what you base the future payouts on. And this is what I was saying earlier about Japan being able to weather shocks like the US tariffs better after several quarters of solid earnings. And then share prices, what we saw above, the valuation, even though we've seen a move upward, the share prices remain reasonable relative to both earnings and to increasing payouts. So this is what has brought the Japanese risk premium into parity with the US. Of course, looking at other market indicators, the bond market is a risk factor, and that links very closely to what I talked about in terms of fiscal responsibility. So we have seen the long end of the JGB yield curve creep upwards, and then part of this is, of course, a warning signal. We've seen that in many developed markets, even more than developing markets. But by this chart on the left-hand side, we're comparing just the near-term moves over the last year in the US, in Japan, in Europe, and the move in the yield curve up for all maturities, that has been far from egregious. And if we compare Japan and the US, the curves from the start of Abenomics to present, the move in the US has been far greater than the move in Japan. So I'm not saying that this is going to be guaranteed to persist, but we know one of the mechanisms whereby we can try to keep these moves orderly, and that is fiscal prudence. So what to do? Well, I think one big thing that is gaining global traction is central bank autonomy. As we've established, inflation is well and truly part of the landscape in Japan in a way it wasn't at the start of Abenomics. In fact, if we look around the world from a political standpoint, inflation has been a bugbear for any incumbent government, almost regardless of ideology or platform. So if inflation is the problem, inflation is the central bank's bailiwick. So now I don't pretend to be cool or anything, but I do reserve the right to open myself to the mockery of younger generations. So I'm going to borrow a phrase from Generation Z. Bank of Japan, its mandate is to combat inflation. We should let them cook.
Okay, that's it. Okay, thank you very much. Interesting, stimulating. Jesper, if you would. Please.
No, fantastic. And do I need anything here? Hey, fantastic. And Naomi, excellent sort of summary of some of the facts that are coming through. I want to sort of swing the picture with this backdrop. I think that the challenges for the next Japanese prime minister are threefold. Number one, the people are angry at the elites because of inflation. The real purchasing power. If you're a pensioner in Japan, which is 2/3 of the people who vote, your purchasing power has gone down by about 70% over the last 18 months alone. And that's something that the people are angry about. The elites in Japan are angry at the United States of America because it's become untrustworthy. And that trade agreement and investment agreement, for all intents and purposes, is a very unequal and unfair treatment of Japan. Why would you invest $550 billion into a country only to be taxed at 50% of the profits from that? This is very unfair. This is very unequal. And then last but not least, everybody, of course, is scared because of technology, AI taking over, because of war being talked about openly now everywhere. So, to Naomi's point, why are people not spending? Why are people saving, particularly in Asia Pacific? I think that that's a big issue coming through. Now, where we are in economic terms, if you summarize Naomi's presentation, it's very simple. When Abe started, Japan had a negative output gap of more than 2%, while now the output gap is closed, if not slightly positive. So it's a very, very different environment, and markets are very lazy in just assuming that we get the same player shoots again. Of course, Takaichi herself, in various comments and speeches, sort of let that going on, that, monetary and fiscal policy are going to continue to stay easy. But for all intents and purposes, since she has become elected, she's backtracked on that. I recall on Saturday, she reprimanded the media for saying, why are you still talking about when a year ago I criticized Bank of Japan Governor Ueda. The deeper problem on inflation is that Japan's trusted tools for controlling inflation actually don't work anymore. Japan has a proud history of intervening via income support or price support measures, and thereby, controlling transient, problems. And we've had more than 5 supplementary budgets over the last couple of years, supposedly to boost the purchasing power of the people, to supposedly restrain price increases, but that obviously has not worked, because for all intents and purposes, it's not just cost-push inflation from rising import prices, but there is growing evidence that we now do have demand-pull inflation, particularly in the domestic service sector. So it's very interesting. I think that the, as it were, problem for the next prime minister is much bigger, because several of the political parties talk about, reducing some of the surcharges, the gasoline surcharge, for example. Some people have proposed to temporarily reduce the consumption tax or cut the consumption tax on food prices. Well, that's nice, but it's not really going to solve the fundamental problem, which is one of bottlenecks and supply constraints that Japan actually has, not just from the labor market, but from the reality that the LDP over the last 40 years has refused to actually reform agriculture and food policy here in Japan. The rice price did not double because of the yen weakening. The rice price doubled because of an irrational, and well-recognized idiotic agricultural policy that Japan has done. And by the way, that's Abe's biggest failure, because he proposed that you could actually consolidate small lot farming and buy up and increase large-scale farming. And that was a great proposal of the, as Naomi pointed out, the third era, but it got completely stalled and cut down to nothing, by the regional powers that be, and that, of course, protect the old agricultural vested interests here in Japan. So it's quite interesting, that you've got these sort of hitting a roadblock, in terms of the failures of not reforming Japan's agricultural policy over the last 30 years, that now comes through in the form of inflation that, for all intents and purposes, right, is going to take at least 3 to 5 years to actually overcome. The other element that I think is quite important when you switch back to the corporate sector, right? You actually find that the corporate sector metabolism is off the charts. Very importantly, just one data point, the latest Tankan brought yet another revision up to domestic business investment. So domestic capital spending, continues to increase. It's been going up for 3 years running, continues to accelerate. And on top of that, of course, as you all know, we have record management buyout activity. We've got record M&A activity. So the metabolism of the corporate sector is actually working very, very well. And I think that from a policy perspective, one of the things that the government can do is actually ease some of the tax rules to further allow the creation of national champions. And just between us girls, I gave a briefing to Takaichi, several months ago, and she asked, why does Japan have 7 car companies? Which is a very relevant question because excessive competition, right? Too much industrial fragmentation is one of the fundamental problems that Japan actually has. The natural instincts of the markets, the reforms of corporate governance and capital stewardship have pushed the market in the right direction of beginning industrial consolidation, but in terms of tax rules and industrial, like especially, Dokkinho, what's that? The anti-monopoly laws, right, being eased up here to allow greater consolidation. The creation of national champions in Japan is one of the fundamental issues that the next prime minister, whoever that's going to be, should be addressing more aggressively. Finally, on the global side, structural change comes in the form of that despite yen weakness and despite the global economy, for all intents and purposes until now having done perfectly fine, that exports of goods from Japan are not growing. As you know, Japan runs a goods merchandise trade deficit now for considerable periods. And you actually see the fundamental reason for that being that made in China competition is now real. It's not just BYD building better cars than the Germans. Sorry, as a German, I'm allowed to say this. It's not, there's nothing malicious about what China is doing. It's just natural. They're climbing up the value chain. But when you look, for example, at Japan's capital goods, precision machinery, robotics, which were the pride and joy of Japan, is really the backbone of what has kept Japan going, over the last 20 years, you find that now made in China capital goods companies, from robotics to construction machinery and even precision machinery, that increasingly they are gaining global market share because they now have the technology, they have the after service to actually deliver true competition to Japan. And that's, of course, where America's trade policy absolutely hurts Japan. Because in the essence, America is making it more difficult for the People's Republic of China to sell their capacity into the United States of America. And as a result of that, what do we get? We get de facto dumping of made in China into third markets. So you actually see that when you look at the data, you see that Japan's goods exports into what is called the global south are down 30-40% because of this intensification, which is fueled by the, I'm revealing my preferences here, but by the rather bizarre mercantilist policy that the United States of America has decided to pursue. So it's quite interesting that, yes, of course, Japan is hurt directly by the tariffs, but actually, and some of my friends who are on the boards of car companies here in Japan, they actually say, well, actually, we're quite happy to pay the 15% because as long as Mr. Trump promises to keep China out of the American market, right? That's a nice ticket to actually ensure that, right? Which gets you, by the way, to the biggest global risk that Japan is facing. The biggest global risk that Japan is facing, is if Mr. Trump were to make a deal with the People's Republic of China and were to allow Chinese EVs to be manufactured and sold in the United States of America, you would have a serious shock, right? Both to Japan as well as, of course, to my home country, Germany here. So what should be done? What could be done? I think that, we are, the easiest way, and this is where the stars are aligned, I believe that there's going to be a Tokyo Accord when President Trump comes and visits, Japan in a couple of weeks. Now, hopefully he does visit. Maybe if Mr. Takaichi is not going to be elected, maybe he won't visit. But we shall see, about what game the Americans are prepared to play on this. A Tokyo Accord being that to tackle the inflationary problem, the easiest and most effective way to do that is to engineer an appreciation of the currency, right? For the yen to go up and for the dollar to go down. Now, we know Mr. Trump and Mr. Besant's preferences for a weaker dollar. We do know, that politically speaking, for every 10 yen that the yen appreciates, you find that Japan's consumer prices go down by about 0.4 to 0.5 percentage points. There's obviously some lags, et cetera, but effectively, if the yen dollar were to go back to 115, 120, you would easily get back down to consumer price inflation running around 1.5, 1.7%. That would be the best way to create a feel-good factor. How do you get there? Well, you need, of course, number one, and I'm very glad that Naomi, gave 3 cheers to the independence of the Bank of Japan. You do, of course, need a clear signal that, the Bank of Japan is indeed prepared to continue its path of normalizing interest rates. And I personally actually do think that they will raise rates at the end of this month, but that's just my personal opinion. But more importantly, you need to see the commitment from Mr. Trump and Mr. Besant that indeed the Federal Reserve is going to start to cut interest rates more aggressively coming through. So that's, I think, sort of a quick high-level station there. Again, the big policy challenges, the final one I was going to make, is on the defense budget, right, where the issue is not, from a Japanese elite's perspective, the issue is not whether we go to 3.5, or 5% of GDP. The issue is who gets the money. And it's very clear that just buying goods from the United States of America is the last thing that Japan wants to do. So, sort of self-sufficiency on the defense side, developing your own cybersecurity expertise rather than just purchasing Palantir, just to use that as a big example, right, is the key agenda. And when you talk to Takaichi, for example, the question about defense spending is, how do I make Hitachi? How do I make Komatsu? How do I make the Japanese startup community stronger by increasing defense spending? So that's going to be, I think, it's much more subtle, than this. So bottom line, markets are wrong. This is not Abe 2.0. Yes, there is a focus on the exchange rate that goes the other way. It is in the national interest of Japan to have yen appreciation rather than yen depreciation. To get there, you need a Tokyo Accord. You do need an outright commitment from both governments that yen appreciation, dollar depreciation is in the best interest of the alliance. And then between the lines, given the growing distrust between the Japanese elite and the American elite, I think this focus on self-sufficiency, particularly in dual use and defense, I think that that's going to be a structural theme, a megatrend going forward. Thank you.
Thank you, Jesper. Stirring stuff. Okay, Richard, over to you. Richard, I'm told that you're on Zoom. You're connected on Zoom twice. So if you
Am I still connected on Zoom? No, I don't hear an echo.
Yeah, you're good.
I turned off one of them. So
You've turned off one. Okay, well, okay.
Can you hear me now?
Seems to be okay. Yes, if you can speak,
Very good.
speak close to the microphone, please.
You have to. You've disabled my screen sharing. So can you enable it, please?
Screen sharing, Dick and I.
Yeah, you got to let me screen share.
Can you try it?
Let me know when that's done. Oh, allow, yes, allow. Oh, Lordy, okay. Here we go. Can you see that?
Yes,
Okay, very good. So let me talk here.
right.
Okay, here we go. So the theme of this is that um, the LDP is no longer in a position to rule. It's not capable of ruling, but the opposition is not yet ready to rule. So that's going to create kind of an economic mess. So what I want to do is first set how I see the economic scene, what I see the tasks that policymakers should be undertaking, the problems they should be solving, and then discuss what Takaichi wants to do and what Tamaki would like to do, and to see if that at all deals with the problems that I see Japan facing. So first of all, Japan is growing so slowly that its rank in global real per capita GDP keeps falling and falling and falling. In 1990, it was 15th in the world. Now it's, according to the IMF, by 2030, it'll be 26th. Now, this is only partly because of demographics and aging. The much bigger problem is that how fast you grow when your labor force is shrinking really depends upon how much more each worker can produce in a given year. Japan needs a productivity revolution. Now you can see from 1970, actually goes back even earlier, maybe it was 20% in 1950, 20% of US per capita GDP, or actually GDP per hour, work hour. It got peaked during 1995 that Japan's productivity got to 71% of the US level and should have kept catching up, but instead it has fallen back to only 58%. Whereas the Eurozone, it more or less stayed the same. So Japan has a long-term growth problem. Even at full capacity, it does not have the kind of productivity that can sustain growth in living standards, let alone its share of world GDP. So that's one problem, the long-term growth problem. They need a growth strategy. The second issue is a macroeconomic demand problem. And the fundamental problem, the most fundamental problem in Japan, which the opposition talks about a lot, but I will argue it has no real solutions for, is that real wages per hour, even though real GDP per capita has grown, real wages per hour for full-time worker equivalent is no higher today than it was in 1990, 35 years ago. This is unbelievable. And there's a very famous theorem in economics that for economies to be stable, wages over the long term have to grow in tandem with GDP. If you don't, you have all kinds of problems. And I will show later on, this is what makes Japan addicted to large budget deficits and very, very low interest rates. So not only wages are flat, but also the government has cut its spending per senior on pensions and on healthcare by 25% over the since 1995. So working people have less income, seniors have less income. And because they have less income, even though they dropped their savings rate to virtually nothing, total consumption is actually less today than it was in 2013. The combination of inflation, deflation, and then inflation, wage suppression brought the corporations, and tax increases. Now, so what Japan faces today, which Takaichi gets wrong when she talks about Abenomics 2.0, she's fighting the last war, which others have said. What Abe was trying to fight deflation. She's got a problem of stagflation, which is not only high prices, and I agree with Jesper that it's turning from simply supply push inflation into also demand pull inflation. That's beginning to rise. I agree with Jesper on that. But in addition, GDP is not growing very well. This is not 2018 where this horizontal line is. So GDP is only a couple points above where it was 7 years ago. So it's got stagflation. That's a tough problem for the central bank. Do you raise interest rates to fight inflation, or do you lower them to fight the stagnation? That's a real problem. It's not an easy one. So what's going on with this lack? Because the wages are growing so slowly, Japan would be in permanent recession unless somebody else became the buyer of last resort. So who's been the buyer of last resort? It's been the Japanese government and it's been foreigners. So since the last 10 years, since 2015, beginning of 2015, half of all the growth of GDP in Japan has come from government spending on goods and services. Half. This is the economy. Japan does not run a budget deficit because politicians like to hand out goodies. And if only they were disciplined, everything would be fine. No, it's addicted to a budget deficit because wage income having been suppressed, people cannot spend. And therefore, to prevent permanent recession, the government's got to keep spending. But you also have another 20% of the growth being supplied by growth in the trade surplus. Well, given Trump's trade war, that's not going to be happening. The trade surplus is going to have a problem with growing. It can shrink. That's going to put even more reliance upon these government deficits. All right. So that's the economic problem. A long-term growth strategy and a macroeconomic demand problem. Now, what's the political context for this? The LDP is totally out of touch. I met with an senior LDP leader in January after the loss of the lower house. And I said, what message were the voters sending you in denying you majority? He said, there's no message. They're not upset with our policies. We're doing fine. We're going to win the upper house election. They're just upset about these financial scandals and that'll go away. Takaichi says inflation is not a problem when 73% of the voters say it's the top problem, right? So I'm not going to go through all these points just in the interest of time, but we're having in the recent election intergenerational battles to help the seniors. You got to tax the working people, and then vice versa. If you don't tax the working people, you can't. So the LDP is not organized to fight us to deal with a situation which you're trying to divide a shrinking pie. Meanwhile, the opposition, it's divided among the parties, and it's even divided within the parties. The CDP is all over the map on these things. So I don't know the coalition government for the opposition. It could be unstable. I think in the long run, it's good to end the LDP monopoly, but I'm not sure how well they're going to actually do. So now let's talk about what is Sane economics? What would she actually do or want to do? And then let's talk about Tamaki, because he may be the kingmaker here. Apparently is the kingmaker. First of all, the idea that she's some smart kind of policy wonk, I think is just nonsense. She's completely inconsistent, and she's also living in a world of unreality that reminds me of Donald Trump. She is not Shinzo Abe. So give me some examples. On the one hand, she says she wants 100% energy self-sufficiency by Japan. And yet, she wants to preserve gasoline cars because she loves the auto lobby. She wants to preserve coal and gas power plants because she loves the fossil fuel lobby and the nuclear lobby. Well, where does the cars and the coal and the gas and the uranium come from? Japan doesn't produce any of those. Similarly, on macroeconomic policy, on the one hand, she says she wants fiscal stimulus and she wants low interest rates. But in today's situation, you cannot have both at the same time. So she wants a weak yen, but she also wants rising real incomes. Again, you cannot have both at the same time. So much of what she puts out as policy and big ideas are actually serving special interests. She's a Paul, you know? And the actual policy, to the extent that it has context, is old-fashioned trickle-down economics. Now, secondly, let's talk about what she says about inflation and real wages, which are the concerns: falling real wages due to wage suppression by the companies and due to inflation. She was the only LDP candidate to not even offer a plan or a goal or a target on real wages. She said, no, that's a matter for the private market. The other candidates at least offered a goal, and that was all fake because they proposed no measures to actually turn their lofty goals into reality. Abe, in general, my problem with Abe was I loved his 3 arrows. My beef is he didn't implement them. He only implemented 1 arrow. But one of the things that he did do was he had a solid commitment to raising the minimum wage by at least 3% a year. So they got to 1,000 yen. And they're over it now, except for the COVID period. So he did that. Takaichi has not even endorsed the Ishiba Kishida goal of next goal being 1,500 yen. It questions the time frame. She says, well, tax credits and spending is going to solve the problem. It's this fantasies of what she calls a high pressure economy. It's the misuse of a distortion, something that Janet Yellen said. That's going to create, wage growth. Well, it hasn't done it for 35 years. They've had low interest rates, zero interest rates. And one fiscal stimulus package after another, it hasn't raised wages. By the way, the markets are acting as if she can somehow dictate policy to the Bank of Japan. I don't believe she can. Now, on the growth, long-term growth strategy, again, she has nothing. Abe at least was talking about the need to revitalize companies. That was the right goal. He did nothing about it except for some corporate governance reforms for publicly listed companies that only employ 10% of the population, and they've not really improved their productivity. What she's talking about is we're going to fund all kinds of sectors and technologies and become self-sufficient across manufacturing sectors. It's a kind of like Trump, a semi-autarkic kind of economic policy. And Abe, despite his political nationalism, was an internationalist in terms of international trade, free trade agreements, etc. He had concessions to foreign protectionism because of the vote, but in terms of his outlook, he was an internationalist. When the U.S. dropped out of TPP, Abe picked up the baton to make sure it could exist, and hopefully wanted the U.S. to re-enter. She supports all kinds of boondoggles, Rapidus, which is supposed to create this 2-nanometer semiconductor by 2027. Well, it may be able to do so in the lab, but most experts think it can never do so profitably when even TSMC and Samsung are having problems over making it a mass market product, and certainly don't expect it by 2027. And she has these fantasies about technology as a magic bullet. And she wants to fund scores of technologies from artificial intelligence to perovskites, which are used for solar power, to quantum stuff, mundane things, shipbuilding, port logistics. Japan's always been looking for this magic bullet, and she's one of the worst offenders on this front. Technology does not generate growth. Companies generate growth by turning technology into economic value. And that's where Japan has fallen down. Japan spends a lot, for example, on digital technology, yet when it comes to how much improvement in sales and growth and profits and productivity do they get from that investment, they run 64th out of 64 countries. Their scientists are producing Nobel Prize winning work in quantum computing, and yet the companies themselves don't hire enough PhDs to understand what they're talking about. And getting there on another issue of metabolism, Jesper raised one issue. The other issue is what takes new technologies is often new companies. Three people just got the Nobel Prize for talking about the need for creative destruction, where new, better, more advanced high-tech companies replace older, inferior companies, and not only in high-tech. And the final issue regarding her is the question whether she's even queen of her own castle, in the way that Abe was clearly king of his castle. She's appointed fiscal hawks to the top posts in the LDP. A year ago, she said a temporary tax cut of the consumption tax was worth considering, the only one leader in the LDP who said that. And today she's ruled it out because ASO has told her, rule it out. There's also a question of what the bond market reaction would be if she tries to go ahead with her expansive fiscal plans. She said the U.S. trade pact that Ishiba was forced upon by Trump was unequal, and she wanted to renegotiate it, parts of it maybe. She's backtracked on that. So what she says is not a good predictor of either what you will want to do or what you will be capable of doing. Now, a little bit on Tamaki, and then we'll wrap it up.
Okay.
My problem with him is how much of what the policies he says does he actually believe in? He seems to switch who he wants to ally with and his positions on policies quite a lot. So supposedly his main thing is let's raise real incomes. And he campaigned for years on cut the consumption tax in half to 5% until real wages grow by 4% a year. And he campaigned on this for the July upper house election. And after the election was over, he abandoned that proposal. He just abandoned it. He says he wants to raise wage hikes, but he has no policy directly on wages. He has not even endorsed the goal of the 1,500 yen minimum wage or any other direct thing. All he says is, well, it's going to handle all this stuff by having a zero income tax bracket, expanding that, reducing social security insurance premiums. It's this idea that somehow tax measures alone are going to address the problem. When I say that, I think the problem is wage suppression. And I think aside from taxes, many of his ideas are far closer to the LDP than they are to other opposition parties. I think if he allied with the LDP, he might moderate some of the things I find extreme in Takaichi, but I don't think it's going to be really a change of the game. Not going to skip that one in the interest of time. Well, just let's say this. He also, like Takaichi said, the BOJ should not raise rates. In 2024, he campaigned and said the BOJ should not raise rates until real wages are hitting 4% annual growth. Real wages, not just nominal wages. Now, I've tried to see what he's saying today, and he's not talking about it a lot. He's not explicitly calling for a weak yen, yet his policies would make it weak. On the energy front, again, he says he wants both nuclear and renewable. He says his views are close to Shinjiro Koizumi, and yet he raises nationalistic concerns that would seem to go against renewables, particularly solar. He says he wants to end the renewable energy tax because it taxes ordinary people to help big firms create solar power. Well, then there's other ways to fund it. He didn't, but in fact, he wants to cut subsidies for solar. He said, I'm worried about there too much of it comes from China. So using, again, a national security argument to stop doing something Japan ought to do. So let me wrap up here. Yeah. So let me wrap up. The bottom line is Japan has got big problems, the long-term growth strategy and the poor demand because of wages. None of the parties are offering a solution to that. And so I think, and given that the external environment because of Trump has gotten so much worse, I think Japan's going to have a pretty rough time in the next few years.
Okay, well, on that optimistic note, we'll draw you to a close and turn
to
questions.
There's one note of optimism. Anything that gets the LDP out of power and moves us a step closer to parties alternating in power is a good thing. And that happens, then parties will maybe begin to realize to win, they got to offer real solutions. So there's the potential silver lining.
Okay, thank you, Richard. We'll turn to the floor for questions first, but allow me just to ask one quick question of the panelists, and that is the political turbulence in Japan, which could persist for some time, possibly a change of government. How far is this going to impact Japan's external image and incoming investment? I mean, real investment in factories and so on, and portfolio investment. So, Jesper, could you have a go at that quickly first, if you don't mind?
I don't think it has a particular impact. I mean, I think that politics in Japan is overrated in the sense of that the actual policy making is done by a solid, confident, ruthlessly efficient national elite bureaucracy. And yes, there are social policies, which obviously capture the imagination. And yes, it is true that when we had real strongmen, where politicians really made a change, this was in times of crisis. You had Hashimoto Ryutaro, in 1995 after the Jusen crisis, implementing radical reform. And you had Koizumi Junichiro, right, coming in at a time of crisis, again implementing relatively radical reform. And you had Prime Minister Abe coming in at a time of crisis. I mean, let's not forget, after the Fukushima disaster, Japan was sinking into the brink of a deflationary death spiral. And, it took that crisis to actually catalyze a leader who, to Richard's point and to Naomi's point, actually was prepared to go against the vested interest that normally run the business as usual. Today, we're not at a crisis. If you follow Richard's line of argument here, looking at the macroeconomic indicators, you could have made that presentation 5 years ago, 10 years ago, 20 years ago, 30 years ago. There's nothing particularly new about it, but Japan has been able to do perfectly fine, right, despite these macroeconomic constraints here. But today, Japan is not at a crisis. So is the image going to be dented? I think that the one thing, even if, which I don't think they will, but even if Takaichi or Tamaki lean on the Bank of Japan and actually stand in front of an NHK microphone and say the Bank of Japan did wrong by raising interest rates, which I don't think they will ever do, right? Even if that were the case, I don't think that the global reputation from an investment perspective, right, is going to be dented. Okay. And that's because, the number one, as Naomi pointed out, the fundamental valuation attraction. Japan is still cheap, right, from all sorts of angles. Number two, the governance and stewardship reforms, together with the growing appetite from domestic institutional investors to engender change. It's very interesting when you actually look at who votes, in these annual meetings, who actually votes against the corporate proposals. It's predominantly domestic institutions. BlackRock, for example, doesn't vote, right? So it's quite interesting, that we talk about the activists as being catalysts for change, which certainly is true, but the reality of the momentum, the democratic groundswell in terms of making your share ownership count, that's actually Nomura Asset Management, Nippon Life, et cetera, et cetera. It's the domestic institutions that are putting the pressure on. And from that perspective, this corporate metabolism, the pressure to do away with lazy balance sheets, with lazy capital allocation, that pressure is going to continue to be extremely attractive for global investors.
Okay, thank you. Do you want to add anything briefly?
Certainly. I would emphasize, especially if we're talking about cross-border flows, that we can't overlook Japan's current account, which, granted, doesn't figure into GDP. And if we look at just GDP, of course, we are in and out of trade surplus month to month. But if we take a look at the current account, we can see that most of the surplus doesn't come from trade, it comes from investment. And this is both from portfolio investment and direct investment. And this is investment outward, because that's what you do when you have a current account surplus. So while Japan might not be exporting as much to the rest of the world, including emerging Asia, they are investing and they are achieving a sizable return. So this is one big, perhaps, windfall from on one hand, it's faster growth abroad, but it's also a windfall from the cheap yen. And here I would also emphasize that GDP in dollar terms is not necessarily the best metric of how Japan is doing, especially if it's not purchasing power parity adjusted. I would encourage everybody to go look at the World Bank's measure of purchasing power parity adjusted GDP ranking, and you'll see you'll see some very interesting things, but it's very different from the dollar-denominated real. So I think that these things need to be taken into account. Japan has a healthy surplus in terms of balance of payments. Surplus means excess savings that can be redeployed if necessary, especially if growth doesn't look as advantageous abroad as it has done for the last few years, and that includes the yen situation.
Okay, thank you. Richard, do you want to add something briefly?
Yes, I do. First of all, just to be clear, the per capita GDP ranking that I gave, that is purchasing power parity from the IMF. So we're talking about people's real living standards, what those look like, not nominal numbers, which I agree with Naomi. Those are terrible indicators.
Nominal and purchasing power parity are, real and purchasing power parity are different.
That's what I'm saying. These are not nominal numbers. These are real purchasing power parity numbers that I was using. Now, okay, it's in the IMF World Economic Outlook. Now, Jesper was saying, well, I could have given this talk anytime in the last several years. Absolutely, that's the problem. I think the difference between myself and Naomi and Jesper is that they deal with investment markets, and the constituency is people who are interested in investing in the market. My interest is how are the Japanese people doing, the Japanese public, the population. So when Jesper says Japan was doing fine, no, Japan was not. Maybe some people in Japan were doing fine, but the typical person in Japan, flat real wages for 35 years, a decline in living standards for a very, very large part of the population. That's why they were so upset. Yeah, Abe talked a good game. I thought everything he proposed to do was terrific. I just wish he had done it. You know, that's the problem. And so I think, will portfolio investors want to invest in Japan? As long as corporate profits keep going up a larger and larger share of GDP and the stock market goes up, yeah, of course they'll want to invest despite the political instability. But that's not going to help the Japanese people, nor does the current account surplus. That money does not flow to the Japanese people. If they invested more in the stock market, they might get it, but that's not. So that's the difference in what we're looking for as the target.
Okay, thanks, Richard. Questions from the room? Any questions from the room first? Yes, Doza, please go to the microphone as usual. Identify yourself and ask your question.
My name is Takuya Nishimura, freelance journalist. When I think about what was the goal of Abenomics was, I can imagine that was the 2% price hike within 2 years or something. And that was a specific target of Abenomics. So when I think about the Takaichi economic policy, what is the target of her economic policy? Do you see any specific target in Takaichi's policy? And if the Tamaki is going to be the prime minister, do you think the a kind of imposing income tax, the threshold of imposing income tax at 1.78 million should be the target of his economic policy?
Naomi, you go first on that.
Certainly. I think it might be a little bit premature to talk yet about Takaichi's economic policy. I think we're still in the phase where, you know, the politician's dilemma is always staying in office, first taking office, staying in office versus representation. So I think we're still taking office, staying in office here, and economic policy will follow. So it's very hard to tell what type of policies will actually be implemented if and when. One thing, though, that might be positive is that, especially compared to the US, the executive branch in Japan has a lot less power than the executive branch in the US. And if we take a look at the Ishiba administration, they've pretty much carried over a lot of the policies from the Ishiba administration has carried a lot of policies over from the Kishida administration. And a lot of these things have been put in place such that they're not that easy to change. Of course, when we were mired in deflation, that was criticized as policy immobilism. Perhaps it was. But now that the dynamics matter, we've come into a real growth situation. In order to keep it going, and the bar is low, potential growth is about 0.5%, according to Bank of Japan. Probably what really needs to happen is to keep this positive momentum going and keep a lot of the structural reforms that have been slowly taking place, like corporate governance, trying to transform savings into investment, and yes, like technology. Technology does matter for long-term growth. And then when referring back to the Nobel Prize winners, yes, I'm one of those nerds who actually stay up and watch. Well, I wasn't that late, but stay up and watch the announcement.
Nice.
Good for you.
Nice.
I would encourage everybody to fast forward to Philippe Aguillon's question and answer session, because you know what? The model, which I've studied, the Schumpeterian model, is not just parroting the philosophies of Schumpeter. In fact, what it took as a given is that, yes, there are companies that come to the technology frontier, and those companies that succeed get excess profits, and the others who cannot keep up die away. But that's a characteristic of the model. There are a whole lot of other conditions that have to happen in order to keep that going, and part of it is technology and innovation and support for that. So things like industrial policy do have roles. Human capital has a role. Over time, the long term, then the labor share of income, capital share of income are supposed to mean revert over time. But what's really supposed to keep growth going long term is total factor productivity. And part of that is technological progress.
Okay, just for a quick retort from you.
I mean, it's interesting. Like I said, you're not in an acute crisis, right? There are many little issues that get people upset and scared and worried, right? But the thing is fine, and you can bemoan, whether Japan's growth potential is, 0.7% or 1.2%. Be my guest, but it's not 3%, it's not 4%. This is a low growth economy, and the primary goal is to retire gracefully, right? I'm not speaking for myself. I think, for the entire population. At the same time, for Takaichi's economic policy, the number one thing she feels very strongly about is creation of national champions. The macroeconomic side is creating a feel-good factor by boosting the purchasing power of the people, is an overarching goal. But inside, this craving to create national champions so that Japan can actually, remain competitive on the global stage. And I would very much contradict, what Richard was saying. Look at, for example, anything analog, right? If you look at, for example, we're not allowed to talk about it, but now we have to. Defense. The frigate, this Mogami frigate that the Japanese built, is applied technology. And you basically get a frigate that needs 1/3 of the staff is fully automated. And that's a real-world application in a world where analog precision and analog efficiency actually matters, and Japan is a champion.
Okay. Richard, do you want to retort to that, frigates and all?
Yeah.
Let's talk about frigates.
Oh, yes. Well, what I'd say, let me go back to this question of Abe's goal. My way I understand Abenomics was that conquering deflation was seen, and I talked to Abe's brain trust. It was seen as a means to an end, and the end was to get 2% a year real GDP growth. Now, Japan has fallen so far behind world benchmarks in so many sectors that actually Japan could grow for about 20 years at somewhere between 2.5%, or even 3%. But let's say 2% real per capita growth, just by catching up to world benchmarks. That should be the goal.
Wow.
Abe had a goal. He did not meet it, but he had a goal. I don't know that Tamaki or Takaichi actually expressed a similar kind of goal, and that'll be interesting to do. And to Jesper's point, look, there are niche sectors where Japan has got more than 50% of the world market share. Each has the largest share in the tiniest sectors. And the sectors where America and the EU and China have more than 50% are actually a larger share of global markets than Japan's. So there's some tiny little products that you couldn't make other things without those Japanese parts, but they don't drive the economy. They're simply too small. But the point is, Japan has the capacity to be really doing so much better than it is. Its people have been a wasted resource, and it's a question of getting companies to operate better. And simply making profits by suppressing wages is not a measure of doing better, in my opinion.
Richard, that's quite an amazing statement. Last time I checked, Toyota is not just the world's largest company by volume of production, but also by far the most profitable car company.
Okay, but before we...
But Toyota is not, I said the sectors in which Japan had more than 50% of the world market. It does not have it in cars, and in fact, its share of the world market in cars
Japan is more than 50%.
I want to give options to the floor to ask questions or online. Any more questions? Yes, George, please.
Toyota's terrific, by the way, but it's one company.
Baumgartner from Swiss Television. Can you give us your appreciations about the markets worldwide? There is a lot of fears, a lot of uncertainties. It's overvalued. Can you give us your appreciation, please?
Did you get the question?
So, certainly,
Yeah, sure.
I'm happy to start with this.
Yeah.
Naomi does.
So I think a lot of the concern right now about global markets is that we see very, very highly valued companies right now in the United States, and that valuation is very concentrated. Also, we see some other assets into which liquidity has flooded, for example, gold at very high levels. And there's a debate going back and forth about whether this is sustainable. Now, I think what we really need to do to answer that question is segment the cyclical side of things and the structural side of things. On the structural side of things, yes, there's this massive investment rush going on, capital investment in the technology sector. And then you have a lot of firms that had record free cash flows, and then they had their measure of cash flow ROI very, very high. They, for a while, operated as capital light platforms, and now they're very capital heavy. So is this a risky strategy? Well, if we look at the cyclicality side of things, we are not guaranteed to realize the productivity of all those investments before the next recession happens. So from a timing standpoint, yes, it is a risky strategy. Longer term, technology is a big driver in total factor productivity, which is a big driver into growth, especially per capita growth. So making this scale of investment and not having any payoff for it is very, very unlikely. So what we have to do when we're managing money is weather the cycles so that we can realize the payoff that comes from the money invested today. And so while we don't want to head for the hills and just give everything back, because then we'll never be able to reap the benefits of the productivity longer term, we also don't want to be unseated by a market event. You know, markets are healthy when they do move two ways, less so when they move one way. So what we do need to do is somehow establish a buffer. So that buffer can be via asset allocation. That buffer can also be by dedicating by maybe sacrificing some proportion of the returns that accrue to momentum right now and allocating to things that we think are undervalued. For example, right now, small, medium-sized enterprises, and this is in the US as well as elsewhere, that small minus big premium that's supposed to be a constant, you know, this is a Fama French model thing, it's supposed to be it pretty much right now has disappeared. Instead, we have a large cap premium. So do we think in the long term the large caps are going to dominate forever? Well, there are problems with this, and part of this comes from Philippe Aguillon's research. There are benefits long term to competition. All of the large caps that we see today were small caps once. Everybody was a baby once, right? I don't know if anyone else read that book when they were a kid, but there is probably some unrealized benefit somewhere that we are overlooking. So what we probably want to do is not sacrifice all of our high conviction trades, but establish a buffer and also try to look for value in places that are underappreciated.
Interesting. Richard, quickly on that, would you like to say anything?
Well, I thought what Naomi was saying about competition and the question is which companies can actually realize the benefits of AI. My observation on the markets is simply that I don't quite understand, and people can explain perhaps, is that the markets seem very happy that Trump threatened to amputate both people's legs and only took off one with a 15% tariff and now maybe stuff on China. And the markets seem to be celebrating as if the Trump trade war is not going to do much damage to the economy. And so that to me is a puzzle and above my pay grade. But that's the issue in the market that concerns me as a big risk factor.
Okay. Do you want to add anything on this question?
On the quick market thing, markets crash when rates go up, not when they go down. That's sort of lesson from 40 years of trying not to lose too much money in investing and speculating in financial markets. And right now, whether you like it or not, the sort of liquidity creation, as it were, continues to be endorsed. And there's also regulatory change that matters. When you had the tightening of bank capital rules under BIS, that was a considerable shock, as it were, right, to the system. And right now, whether we like it or not, the regulatory regime, particularly in the United States, goes the other way. It's an opening up of the spigot here. By the way, in Japan, it's exactly the same thing, because you actually find that Japanese banks are now prepared to lend if you do want to do a management buyout, which 5 years ago just was not available, right? So liquidity creation, both from the price of money perspective going down, interest rates going down, globally I'm talking about, right, particularly the United States, and regulatory, right, easing up rather than tightening. From that perspective, the prospects of the bubble continuing to bubble, I think is quite nice. Now, where to invest, I think, that look at the mega trends that we do have in the world. And the first one is, whether we like it or not, it is defense spending, right? Because everybody, right, whether it's Europe, whether it's Japan, whether it's the United States, whether it's China, everybody is doubling, for all intents and purposes, their defense budgets, right? So in the world, for Japan, just to give a little pump, if you want to have a sensor that actually, gets put onto a drone, you find again that Japan has some excellent companies, right, to sort of doing that. So mega trends, defense spending. The other one is the rise of the Asian middle class, right? Creature comforts for people in Indonesia, the entertainment industry for Indonesia and all of the global south, again, creates huge opportunities. And again, sorry, just to give another pinch to Richard, I mean, please note that Hello Kitty is annual revenues are twice that of Disney. These are huge empires that Japan has. The third one is, of course, the infrastructure build-up in the global south, right? And it's very interesting. You've got, hopefully, fingers crossed, a lasting peace agreement in the Middle East. This will free up huge opportunities, right, for infrastructure investment, in that region. And then last but not least, here in Japan, the creation of national champions. Industrial consolidation here, I think, is going to be a fundamental theme. Let's make a prediction. Today, Japan has more than 4,000 listed companies. I think that in 5 years' time, it will be less than 3,000. Thank you.
Okay. We've got time for another question. Do we have a question or online? If not, I would like to ask a question that will put the panelists in an invidious position. And that is, okay, it's true, and I've heard it so many times said that Japan has a strong bureaucracy, so not to worry what's happening in the political establishment. But the fact is that you need vision at the top. you need political vision. Do the panelists see anyone within or outside of the existing structure, party structure, who has that kind of vision? Naomi.
Yeah, I have to say that I don't think political vision is necessarily the most important ingredient for long-term sustainable growth. I think the quality of institutions are. And the quality of institutions, I would say, not only in Japan, but without as well. That relationship that Jesper described between interest rates and markets, well, that is thanks to the credibility of the Fed. If the Fed loses that, and if we are in a situation where we're just trying to manipulate rates by buying assets, then watch out, things are going to change drastically. So I think maintaining the quality of institutions and making sure we have inclusive growth, and that's last year's Nobel Prize winner, Darren Acemoglu. I did disclose, I'm that type of nerd. We need that inclusive growth, and for the inclusive growth, we need healthy institutions. So what I'm looking around, when I look at policymakers, it's not necessarily who gets what type of support, but whether we're likely to have solid institutions and establish a solid basis for long-term inclusive growth.
Thank you, Sensei. Jesper, do you want to add anything on that quickly?
Well, I mean, so we all crave for a strong man, or a strong woman, but, I think that, as Naomi said, the quality of the institution, the fact that the national bureaucracy actually is, I think that the vision thing that Japan has, I mean, it's actually pretty clearly, determined. Right? Yes, the number one goal is, to retire gracefully, to have that. Yes, you do want to, stay competitive, on the global scale so that you can continue to fund that aging society by earning the income from your overseas investment and from your global competitiveness. I mean, Japan is a rentier economy. It lives off its asset. And, even though I don't like Mr. Kishida, the asset income doubling plan, which they are focusing on, is exactly the right thing to do. And that means, yes, higher return on your equity investment, but it also means, higher returns, on your fixed income investments here in Japan. That does mean a world with higher interest rates.
Okay, Richard.
Yeah, Anthony, I'm in your camp. I mean, I think the bureaucracy is very, very good at keeping the train running very, very well, but the train needs to be moving in a different direction. And without political impetus that says, no, we need to move in a different direction, it's not going to happen. And so I think what you'll be doing is the economy will muddle along. It may not have a crisis in the sense of a moment that forces people to do something, and maybe more like the frog in the heating up water. But the point is, we've had these decades now of stagnant and even declining living standards. The bureaucracy can't take care of that. What I do notice that some of Japan's greatest reforms have occurred at a time when the LDP was in danger of losing power, but it also had a strong prime minister who could respond to that situation. Now, sometimes they responded well, sometimes poorly. Tanaka, can't remember his name. Tanaka, I'm sorry, I'm having a brain freeze. Did a lot of things that were bad for the economy, but also a lot of things that reformed. Healthcare in the 60s and 70s, universal healthcare. The things they did for education, which lifted up everybody, but also retrograde things. I think Koizumi, the father, changed Japan not by what he accomplished, but by raising the consciousness that Japan needed fundamental reform in order for it to return to prosperity. And so that was very, very important. I would say that before he came to power, a lot of people dismissed him as a flake. So we never know where that person is going to come from, or that group of people. Who knew Bill Clinton very much before he became president? It happens that way very often.
Okay.
Yep. So.
Can I make one final point on that? And that I think that, I mean, this is something I'm struggling with, right? Because I mean, there's no question, you don't want to choose between the People's Republic of China and the United States of America, because you're dependent on both of them, right? In many different and complex ways. The problem is that, where does my vision, where does my leadership, what are the inputs that create the narrative, that create that vision, right? Whether it's in a time of crisis or whether it's in a time of good times, right? The problem is that the way the United States of America is behaving now, it's no longer the role model, right? And that's true for social policy, that's true for monetary policy, that's true for, like Naomi said, the attack on the Fed is, I mean, nobody in Japan would attack an institution like that, right? And then, of course, the economic policy, right, which is outright protectionist, and completely unilateral, might is right, as opposed to multilateral, let's work it out. That is a fundamental problem. And so, there is a crisis of vision, right? Not just in Japan, but everywhere in the world, because the leading light, as it were, has gone out.
Okay. Sorry, mea culpa, I neglected to notice there was a question from floor, so final question, absolutely. Yoda-san.
Member Yoda, thank you for presentation. I think today's deep dive series is based on the assumption that Sanae Takaichi will become a prime minister. May I ask each of you, she will become a prime minister or not? Who do you think will be?
Thank you, Yoda-san. You asked the question I was nervous about asking. Naomi-san.
Sure. My response is going to be very short. I'm an economist, not a political analyst, so I don't have a view about who is likely to become prime minister. I am very interested in the policy details when we hear more about it of each of the candidates. However, I don't presently have a view about who is likely to become the next prime minister.
With that diplomatic answer, Jesper.
Isun Saki Wayami.
What?
He's 3 inches ahead, there's darkness. Look, in the here and now, the opposition parties don't want an election. It's about an election because the opposition parties don't have the money and don't have the candidates to actually win and capitalize on any sort of alliance there. So I think that in favor of Tamaki would be a promise to not dissolve parliament as prime minister, right, for at least, pick a number, a year or something like that. While Takaichi, in my understanding, is quite keen to have an election because she thinks that, this move to the right, this move towards patriotism, nationalism, whatever you want to call it, right, would create, a favorable environment there. And it'll be interesting to see whether what are they called again? Anyway, it'd be interesting to see whether some of the right-wing parties or more nationalist parties, would agree with her on actually doing that. So I think it's ultimately going to be the promise that Mr. Tamaki or Ms. Takaichi makes on when to call an election, which, by the way, was very similar to what happened with Abe and Noda, right, at the time. You remember that.
Richard, last word.
Yeah, I try to make forecasts about the past. I'm much better about that than forecasting the future. I will say that the financial markets are, I think the figure I saw today was giving Takaichi a 67% chance of being the new prime minister. And the problem is Tamaki is like too clever by half. So you never know who he's going to lie with today, what he'll do tomorrow. So it's a very, very turbulent situation. So my answer is I don't know.
Okay.
But the markets are saying her.
Let's hope that whoever does become Prime Minister has listened to today's debate and benefited from the wisdom of our panelists. And I would like to thank them all. Thank you, Naomi-san. Thank you, Jesper. Thank you, Richard. Please join me in thanking our panelists. And with that, the debate is closed. Thank you very much.